அப்படியே கண்டினியூ பண்ணிட்டாமா ஓகே. Good evening to you. Welcome you to today's webinar. Today we are looking at the finer points of how to use trend line, pivot points and volatility indicator. That is average to range. These three indicators, either on a singular basis or a combination of this, is used for trading stop loss. It is also used for taking positions, but trailing stop loss, this is very, very important. This is normally used by traders not to apply a trailing stop loss. This we have seen before, but we will just look at these things in the charts now. Pivot points, normally the pivot points are suppose if the market goes like this, then this is an important, these are two important pivot points. That is, this the last high that is being made and the last low being made in the market. So generally what they use is, they use this top itself, because instead of waiting for this bottom, you can use the top itself as a stop loss. So here you can use this as a stop loss. So trailing stop loss. So you can get closer to the market. Sometimes what can happen is this probably can slightly get down below this and start moving up. So what they do is that they use 50% of this move. So this 50% of this move is also used as a trailing stop loss. So all these things depend on your comfort. That is, the trailing stop loss, how tight you want to keep, will decide your time frame, because the position taking as well as the stop losses and the profit target that you use will depend on your tolerance level. Suppose in the case of Nifty, you are looking at something like 100 points, 125 points in Nifty, probably you can go for the hourly chart. If it is a daily chart, it could be even 300, 350 points. If it is a 15 minutes chart, probably you can get something like 70, 80 points. So it all depends on what sort of tolerance limit that you have and what is the how dynamic you want to be. That will decide your trailing stop losses. For example, for big investors, normally they will say, okay, we will put it if the market moves down below all the major moving averages, 20, 50, 100, 200. But that will take you to a very significantly down. For example, in the case of Nifty, it is almost 3,000 points. So you can't apply a stop loss which is around 12 to 15% away from the top. So that is very difficult, because the market can bounce back from that level. So the stop losses have to be kept in a slightly tighter manner, so that the profit can be taken, and on a deeper pullback you can enter into the market. So in the case of daily chart, probably they will use a 20-day moving average. So either a 20-day moving average, or probably like what we have seen as a pivot point, and if the pivot point is uncomfortable on a daily basis in terms of the magnitude, normally they go for the hourly chart. So we will illustrate that also. And also the trend line can also be used. And third thing is the volatility indicator. Now in the case of volatility indicator, even the one-time true average, that is ATR, in today's circumstances, in the daily chart, it's almost 300 points. 300 points also could be slightly, could be slightly tight. So normally they go for get down to the hourly moving average, or even a 15 minutes moving average. That is the ATR, in order to get a stop loss which is closer to what they like. So we can use a combination of all those things to decide where we want to move. So we will just see some of these concepts today. And also we will in a future week, I think we will also look at some patterns, that is the normal trading rhythmic pattern in the market. So you can use that also for a stop loss. For example, we can see in the case of Nifty, probably it could be 200, it is 220, 240 points sometimes it goes down to 100 points. So we will see how all those things are also being worked out. Some people will also use Fibonacci. They may use the 23.5% retracement or 38.2% retracement as a stop loss. So let us look at all these things together and take a view depending on your stop loss situation. So we will illustrate it stock wise also in the case of Nifty index. So starting now, like the pivot points that we have to start with, and probably we'll also look at the trend line. So pivot points, trend line, and the ATR concept. So these three things we will use along with Fibonacci in a particular stock. For example, let us say now the performing stock is TCS, because the markets are falling down, but TCS has moved higher because of better than expected results, and also rupee is depreciating. So IT stocks are doing much better compared to the overall trend in the market, and particularly the top IT stocks. So the small cap and mid cap are taking a beat because the valuations are high. So now we will look at the chart straight away and apply these concepts. Okay, this is TCS in an hourly chart. This is TCS in hourly chart. Now this is a pivot point. So because this is a low, the lower definition we have already given. That is, if there is one bar which is higher, having a higher bottom, and the succeeding bar also has a higher bottom in this case, then this becomes a pivot point. So this pivot point can be used for trailing stop loss. So what normally we do is, straight away we go up to this. Okay, this is 42.27. So market is now at 43.25, right? So 43.22 and 42.27 represents something like 100 points down. Okay, something like 100 points down in the market. Probably we can use this as a stop loss for TCS for those who have gone in the long position, because this is a pivot point. Straight away, this is a pivot point. And also we look at the trend line. Let us go to the daily chart. See, trend lines are also very helpful for both projection of profit target as well as this one. See, now we draw this line. Okay. Now today there's 42.27. So today's low was also 42. I think it was 42.27. Okay, so 42.27 now based on the trend line also and based on the pivot points also, 42.27 is an important stop loss for TCS. That is a tighter stop loss. It can fall down into 40.60, 40.70 and then revive. But what I'm saying is those who are looking at a stop loss which is comfortable. So in the case of TCS, mostly you may have to go for something like 90 to 100 point stop loss. That is where probably below that means you have to go to even smaller time frame chart. Smaller time frame chart which could be 15 minutes chart or something like that. So if you want to work out a tighter stop loss, then we have to look at whether a 15 minute chart has got some patterns where you can take a stop loss and then re-enter. But I think this 90 to 100 points is the normal stop loss which comes as far as TCS is concerned. And anything above that, I think it will be quite liberal. So in this particular case, it is 42.27, and there also will be one particular day's low, which means if it is falling below this particular day's low, then there's a chance that probably it can slightly be, it can slightly go a little lower also. So one thing is that people generally use either it's a single day thing as a stop loss, or probably they also use a 2-day time frame or 3-day time frame also as a stop loss. So 3 days and all will be a little higher. So probably there's a chance that you can use a 2-day tighter stop loss also to get in and get out of the market. Now you see this is 2 days thing. So here if in the previous stage it is 43.10, then probably entering it again above this 42.98 levels. So here if you see the 2-day trend being broken somewhere here, okay, so one here also, so slight penetration, but again it starts to go down. So 2 days and 3 days normally stop losses are used, or probably they also use the Fibonacci also. So Fibonacci is you can use it 23.5 or 38.2. Now from here if you use at 23.5, then it comes closer to 42.46. So we have talked about 42.27. So 42.48 is the 23.5% retracement, because you cannot afford to get much lower. So 42.48 could be a stop loss. And here if you look at it from this angle, that is, you can use a Fibonacci from here also and just see. Okay. Now it has gone above this particular level. It has gone above 42.68, and so that means the next level that you put is around the 4200. Or if you look at the difference from here, normally you have 140 to 150 points. So 140 to 150 points also is possible, which means 47, 70, 80 it can come and then push it. But I think the thing that we can look at it is the pivot point. So here there's 42.27, so we can get below the 42.27, then you can remove your position as far as any long is concerned. If 42.27 is penetrated, then when it climbs higher, it may have resistance again at this point, that is 42.97. So again, if it clears 42.97, you can go for a long with a 42.27 stop loss. So it will look as if we are trying to enter and exit, because this is a market which is a little more of a trading market than investment market now, because of the fall in the market. So we do not know how it is going to get bullish again. What are the trigger points? It could be a budget. Whatever developments that are going to happen next month. But till such time we get a clarity of the market moving up on the upside in a clear manner, I think it becomes a trading market, not an investment market. So even in the case of TCS, which is a strong stop, it is better to go with tighter stop loss, because we do not know at what time the complexion of the market changes. So here you can use an hourly pivot point to get out of the market. Now normally if the that is the price falls below 1 ATR, actually in the case of a daily chart, then we can say probably the market has formed a top. So the ATR generally is used as a for trading stop loss, because it will give you an impression that market has formed a top. Now now this is 43.22, 42.27. So the average of this level is around 42.77, and the ATR is now 103. So 42.77 minus 103. So in order to say the market has formed a bottom, it has to get below 41.74 on a close basis. So getting much below 41.74 has to happen before we say that a real top has been formed. Instead of waiting for a 41.74 to be broken, we can just use 42.27 itself, because we need a tighter stop loss. So a tighter stop loss will be helpful in a bull market situation as far as TCS is concerned, because you have to get out early and then get in again depending on the market consideration. So better not to use a very liberal stop loss in the case of a bull market. You just if you want to get in and get out, which makes some profits, then in that case you need to be a little tighter, because if you get out at 41.74, then it may fall down to 40.50, and by the time you enter, it will be still you will be able to enter only about 41.74.75. So at this point of time, I would prefer straight away 42.27, or you have to apply a 38.2% retracement, because normally a lot of traders use a 38.2% retracement from some important pivot points. For example, in this particular case, if you see, okay, so 38.2% retracement approximately. Similarly, see here 23.5% is used, but 38.2 also can be used. So 38.2% also can be used. So, but one thing very clear in any market, things need not be exactly, it did not exactly go as per what we planned. So we need to be a little careful, make some judgment also. The thing is that if you look at all corrections in this particular in TCS, in the present circumstances, the corrections in a smaller manner has been, see for example, this is around 41.14 to 42.18, so 100 points. So 100 points correction happens, and that is what we see from here. It will be a 43.22 to 42.22. So that is a first type of correction. Then second correction happens like from here, which is 40.30 to 41.83, which is 150 points. So 150 points here means 41.74. You need to decide whether you want to go for a smaller pattern correction or bigger pattern correction. Those who feel that they want to go for a smaller this one, should use this particular correction levels, which is for 100 points correction, 800 points correction, because here also if you see in this particular level it is 44.89, then 43.94, so approximately an 100 point correction. But if you go for this, in this case it is 43.77 and 41.95, 180 points correction. But you get out of that 100 points, and here again you got 41.95, 42.98, so 100 points correction. So basically in the case of TCS, you use approximately a 90 to 100 points as a correction and get out of this market based on that. So a Fibonacci number approximately of 89 to 90 points seems to be working as far as TCS is concerned, which is also represents something like 2.5%, 2.2, 2.3% as far as TCS is concerned. So you can use that particular one, which is around the 2.3, 2.4% in the market as far as TCS is concerned. Because we have already also said that previously, this 23.5% is a very important place. So if you divide it by 10, it becomes 2.35. So for intraday or for smaller position, you can use the 2.3 or 2.2% correction, particularly in the case of TCS. And let us look at now we have looked at the trend line, we have looked at the pivot point, we have also looked at the ATR and also the Fibonacci as far as TCS is concerned. Now we will apply this to some other stocks. Let us look at probably ICICI. And we will also look at gold, because we are looking at various asset markets, and probably we will look at gold also. See, in the case of ICICI, say now this is looking a little not very clear chart, because you see this high of 1295 and this low, this has been the range 1295 to 1217, right? So this is 1362 to 1217, which is this 140, 150 points. So this has been the range as far as ICICI is concerned. So we have to see whether this is going to break down or it is going to go up. Again, probably take support from this level. Suppose if it breaks, then this 150 points. So you will also get 150 points normally on the downside, which is 1217 minus 150. Okay, so 1050, 1060 becomes a possibility in case if ICICI breaks this level. So on a chart pattern, this consolidation has to give in forms of, if it goes above, you will get the same amount of consolidated amount on the upside or on the downside. So on the downside, if you look at it, this can probably look as if the 1217 broken can lead up to 1065. So we need to be very careful about ICICI also. If it starts breaking this, I think you should be out of the market and wait till a 1065 comes. And 1065, 1070 also represent approximately a 20% on the downside as far as ICICI is concerned. Presently, the fall in ICICI has been quite muted in the sense that we have got only something like less than 10%, whereas the index itself has gone down much more. So to that extent, it still relatively on a relative scale, this still looks bullish, but probably at some stage also it can fall, because when other stocks have been beaten, probably depending on the result, even this may be taken for a clean to the boundary. So we need to be careful about even ICICI is concerned. And this is a pivot point. See, for example, this is what we are saying. This is an important pivot point. And normally in this important pivot point, you get any pullback up to 78.6% retracement, sometimes 61.5, sometimes it goes to 70, 75, 76 points. So approximately this place it should have held. This is after this deep pull down, you see this market holding up to this level. This is 1230, 1234. So let us see whether there is a chance for the market now to pull back or going to reverse. Now it is breaking this particular level, so we can wait till this 1216, 1217 to come. Now, if you look at the overall trend line, so trend line, if we draw, depending on from where we draw, so a bigger fall was here on June 4th. So from here we draw the trend line. Okay, now this is one line, and this is another one after some time. Okay. And this is another one, right? This is another one. Here, if you can use the trend line also for trailing stop loss, but this trend line will put you a stop loss only below this level, right? So this is significantly from 1272. This is 1350, so it's almost 80 points, which is more than 6%. So instead of that, we can use a pivot point. For example, this place. Okay, this particular place. From there, now we said the top itself can be used as a stop loss, so trailing stop loss, right? So that's the first one which illustrated. So here 1314. So any move which went up there, so anything below 1314 itself can be used as a stop loss. 1314 itself can be used as a stop loss. So that's what has happened. And right now, if you look at this market, it can go long only if it starts breaking this particular, because this is the important low. Right, so if this is important low has to be, this is the important low. Of course, this is much more important. So here it may have to break either this or it has to break this. So we will go with this. So it needs to clear 1275, 1280. It has to clear before we can get again on the long side of the market. So right now we are still hoping for a better thing, but still, we are not very sure whether ICICI will again start becoming bullish till such time it drops down to some much greater lower level. Now, if you look at the here, see for example, now I'll draw a horizontal line on the left side of the chart. We go to the left side of the chart in any chart. Now, horizontal ray. Okay. So now just look at this. Now it has come down to this level, right? For illustration. Now you go to the left hand side of the chart. The bottom which corresponds to this low of today, that is 1224. Now same 1224 here. So what happens? The resistance will come closer to this place. When it starts moving up, 1265 will be the resistance. 1265 will be the resistance. So you can comfortably say that for any short position, you should keep 1265 as a stop loss. And if it starts to, if you want to buy, the level should be above 1265, and above 1265 with a stop loss below 1225. 1265 above with a stop loss of 1224 is the long position that can be obtained through a pivot point, chart based pivot point, as far as ICICI is concerned. Because what we have done is, if any particular low, where the market is at a particular low, just go back to the left side of the chart. See where any other bottom coincides with this. Now from that bottom, either the market would have fallen to the bottom from a peak, or there would have been a correction from that bottom to a peak, now to a new high. So this place. So what we need is the same points has to be clear. This place has to be clear for us to go on the long side. So right now we have the same place. See, now it is also at 1224. This is also 1224. So either this is slightly higher on the side of 1265. This is at 1258. So 1258 and 1264 is not going to make much of a difference. So either you can go about 1258 or 1264 for a new long. So we can keep 1264 in order to be a little more liberal as far as the position is concerned. So this is how we, you look at the analysis of the market, and based on the Fibonacci, I think right now we are looking at, say for example, from this, this was a new, this was one peak. So from here, if you draw this one, so 76.8 comes to 1273. So 1263 to 1265. That's what we are saying. Right now we should be going only about between the 1265 to 1273. That is where the 61.8 and 78.6% retracement comes. So from the chart also, it looks as if the 1265 has to be clear. So wait to see how the market reacts closer to 1265, and then you can look towards going long if it starts breaking 1265. So this is the analysis as far as ICICI is concerned, based on the time chart, based on the normal chart. And let's look at this from the 15 minutes chart in order to see whether you could have 15 minutes chart. Okay. See, normally, this volatility can be for a week on a suppose you want to know to what extent the market can go up. Okay, then in that case you can even use a 15 minutes 3 times ATR chart. Now in this case it's around 4, I think. So if you look at the rise, it goes closer to 3 times ATR and falls. For example, this is 12, almost the ATR here is 14 on a 14 bar 15 minute chart. The ATR is closer to 4, and here it is 1252 plus 12, so almost 1253 is the midpoint here, and 4 into 3 is 12, so approximately 1265, 1266. And if you see the Howell, this one, it's just closer to 1265.80. So here, from here, if it starts to drop, then probably this place can be a stop loss for an intraday trading. And so here also, same thing, just 4 into 3, approximately 12, so 1260, 1261, okay, approximately that place, and from there it starts to drop. So here, if you look at it tomorrow, immediately, it's around the 4. So 4 into 3, 12, approximately 12 to 13 points. So it could rise 12 closer to the 1237, 1238. So you can keep 1237, 1238 or approximately 1240 as a place where you can look towards seeing whether we want to go on the short side. So if you're looking at an intraday, I think you can look at 1235 to 1240 as a place where you can go for a stop loss and put this high as a stop loss, that is 1244. So 1244, because this is also a pivot point, right? So this is also a pivot point. So this pivot point in this particular case is 1243, 1244. So you can look towards going on the short side, keeping 1244 as a stop loss. So I doubt very much whether it will go above 1244 if it is going to be on a weaker on an intraday basis. And also let's look at the indicators in the pivot point, normal pivot point formula for a 15 minutes chart. So here today it fell below this, right? So tomorrow if it goes, it may not clear this 1240. It may not clear 1240, and so you can go short, keeping 1240 as closer to 1240, and keeping this high as a stop loss. That is 1244 as a stop loss. 1244 as a stop loss for an intraday position tomorrow, because the moment it starts to go below any particular pivot point support resistance, the same thing will act as a resistance. Now S1 was a support today, 1240 should have been a support, it didn't hold. So the moment it didn't hold around the 1240, so here also if you see between S1 and S2 it's around 10 points, and between PP and S1 is around 12 to 13 points. So that is what we are also indicating. So based on for an intraday trade, the 12 to 13 points probably can be an important place where you can put in a stop loss. If you look at the so there is a coincidence between what this 15 minutes ATR and this pivot point formula is concerned. So you can use this in order to look towards some intraday trading. So tomorrow ICICI goes closer to 1237, 12. See, because this was it may not even go up to that, because it is 1226 plus 1238, 1240. So it can go closer to the 1240. So you can go look towards going short at 1240 with giving 1244 as a stop loss. So you can use these concepts of pivot point, formula based pivot point, normal pivot point, as well as the ATRs. Okay, in order to get into both entry position as well as stop loss positions, you can do that. So now we have illustrated in two important stocks, ICICI Bank and TCS. So we will look at this in a slightly more volatile stocks, and probably we'll look at let us say slightly more volatile stock, and let's look at Bharat Electronics. See, Bharat Electronics also has fallen significantly, and probably because it is highly valued. They're saying that the fair value is coming only closer to the 200 mark. That's what most of the analysis says. That the fair valuation is something like 195 to 200 as far as BL is concerned. All these stocks are very good, but the valuation has been driven higher mainly because of the mutual funds, because of the liquidity flows that have happened. So why should we now let us look at a bigger chart, in this case a weekly chart, in order to know where exactly this particular year it could head to. So 195, 196 is the S1 this year. 196, it has fallen below the pivot point. So chances that it could go closer to the 196 exists. And the movement, now the one support which has been coming closer is the 250 levels. So if it starts to break around this, I think we need to wait till it comes closer to the 195, 196, where there's quite amount of fair value as far as Bharat Electronics is concerned, from where we can look towards going on the long side. So in this stock, which is slightly more volatile, because let us look at the 15-minute chart. Okay, now 15-minute chart here, you have got going something like 1.5. So for 5 rupees, probably it can move by 2% on a single day. 2% on a single day is possible. So 5 rupees from here, 258 means it goes closer to the 263. That is the S1 levels, because it has gone below this. So what we can do is that we can go right up to 262, 263 today, and put in a stop loss about 267. So if you want to go short on BL, just based on the 15 minutes ATR and based on the pivot point, it looks as if 263 hit with a 267 stop loss is possible. So today also, it opened at something like 265 and went up to only 268. So 264 was the low and 268 was the high. And here also, if you look at it, it was 1.6 into 3, 4.8, approximately 5 rupees from 274. So 279. So we can say it should not cross 279. Okay, 278.30, and it started to fall. So you can use a 15 minutes ATR along with the pivot point formula. Okay, along the pivot point formula, also to get to see how you can do this trade. Now let us say it goes closer to the 278 mark. Then you use any 15 minutes bar, now low, that is 276.65. So you can just go short below 276.65 with a stop loss about 217.830, 270. So you can get just 2 rupees down, and probably and that stocks you trade on intraday basis. Chances that you may get 300, 400 or 500 rupees also on the downside for a small 100 rupees, 200 rupees risk. Okay. So this is as far as BEL is concerned. So any other stock, probably we look at index itself. We look at Nifty small cap. Nifty small cap 250 index. So this has seen at 16,001. First of all, let's put the date week chart. In order to know the bigger position, from 18,656, so 2,500 points, right? So 2,500 points divided by 18,656. Something like 13%, almost going along with the Nifty. So it's not that it is doing anything bad, but it's going along with the Nifty. So the first support that we can expect is that the 16,000 itself, closer to the 16,000, failing which we may have to get closer to the S1, which is 14,661. 14,661. So on a bigger scale, I think the best support that we can look towards to buy is around this 14,660 levels. 14,660 levels will be a better level to go for the long side of the market. And let us look at the monthly chart also in this. So approximately, you know, the 1162 is the 3 times will come to 3,500 points. Approximately 3,500 points is 18,410 minus 3,500. 14,910. So that is what we are saying, that S1 is 14,460. So something closer to this is a possibility. It's a possibility. And this particular high, just the let us say 15,489. That could be also an important. I'll just remove this. So this particular level, the first support we are expecting here, failing which probably we could see this particular level. Okay, 15,489, 15,489. So we worked out something like 14,940. Need not come exactly up to that. So the big support will come closer to the 15,500. So 15,500 itself is around 3,000 points down, which is approximately 15 to 18%. I think it could take support closer to that place. It could take support closer to that place. And bigger thing is the trend line. Now let us look at the trend line. Okay, now so it is very closer to this particular trend line, and if it breaks, then we have to put a parallel line here. Okay, so this line is going to be very important. So this month, next month, 15,169. So this particular month, 14,915. So I think 15,000, approximately a 15,000. Okay, approximately a 15,000 level can be a very important level as far as small cap is concerned for investment purpose. Closer to that 15,000. Very difficult to say whether it will go to 14,900, it's 500 or so. But we will be closer to the bottom by buying closer to the 15,000 levels, because 15,000 is 3,500 points down it will be, which will be approximately 19 to 20%. So a good level to go for a long as far as small cap is concerned at this particular level. Now see the trend line, the bigger line, see that's what I'm just saying, that no from important low. This it held and then now it has dropped. So let's look at the next levels. Okay. So these are the this is another level, because this level is still not been broken. Okay. So this comes closer to the 15,169. So somewhere this particular level, you know, this 15,000. 15,060 close. 15,060 was an important monthly close. So I think I expect 15,060, 15,070 probably to hold for the market to rally back. So keep an eye on that. Now let's look at the same thing on an intraday basis, because you've got ETFs in which you can trade. So so this is 15-minute chart. So on any pullback normally can be something like a 16 to 3, 180 points. 180 points can be a good pullback as far as that is small cap is concerned, and you can look towards going short based on this. Now let us say this particular place the market was closer to 62, so 180 to 2, you can say 180 to 200 points, and you can do it from a close. Okay, now let us say this close is 16,838. So 16,838 plus approximately 200 points. It is approximately a 17,050 level, 17,038, 17,000. See, 17,032. So the pullback normally on a daily chart should be confined closer to the 3 times ATR of a 15-minute chart. And based on that, it could be some 180 points approximately in this basis. It should be approximately 180 points. So 16,129 plus 180 points, approximately 16,300. So if it starts to move closer to the 16,300, we could see some sort of a resistance coming in this. And now we can put the Fibonacci also for this from this level to get more confirmation. So now the 23.6% comes closer to 16,300. So that is where I think probably we will see the first resistance coming in market closer to 16,300 levels tomorrow. So keep an eye on that level for any pullback for it to go short. Okay. Now let's look at Nifty. So Nifty 63. So 63 in the 15-minute chart, 189 approximately 200, and we need to apply to say either you can take an average of 23,263 plus, or you can put it from a close 23,217 plus approximately 190 to 200 points. So 23,407. So it didn't come up to this. So it could have been 23,400. So it just dropped closer to 23,340. Okay. And now in this particular case, let us say it was 46. The volatility was slightly down. So in this particular case, maybe it's around 140 to 150 points. So 140 to 150 points, 23,400, 344, approximately, let us say 360, 370. 370 plus 150, 420, around 400 levels approximately. You can see 410, 410 approximately from there. See 444, and it started to rally from there. Okay, so the moment it cut this, you could have gone long. You could have gone long, and you could have done slightly waited for this to go on the upside. And again, when it comes to 150 to 160 points down from this particular level, you could have exited this position. So approximately 560, 570 minus 150 points. So 410, 477. So this place probably yes. So probably the same place where you entered, you may have to get out of this market. Okay. This particular thing, and after this year we saw the market going short, and tomorrow if it starts to pull back, the first thing that you can do is again 48 into 3, 150 to 150 points. So 140 to 150 points from this level means 23,115 plus 23,047 divided by 2 plus approximately 150. So 23,230, that is where the market stood for some time. So 23,230 will be an important resistance. So here it is. So it may not go much above 23,230, and you can put in a Fibonacci from this level also, because that is today's high. $23,230. So yes, so 23,224. So if it starts to pull back, it may have a resistance closer to this. Between 224 and 260, 270, it may stop and then pull back. So that particular place you can look towards going on the shorter side. So that is how we use various, this one, that is the ATR, we use the trend line, we use the pivot point formula or the pivot points, or the Fibonacci. Some people use a 20-day moving average. So depending on whichever you feel you are comfortable with, you can use this both for entry as well as for exit positions also. But more or less you can use this for trading stop loss. So these are the finer points that we should consider, and we will apply that in the market as we go forward. So in case if you have any doubt today, please ask me now. Happy Pongal to all of you. Thanks for your participation today, and we look forward to seeing you again on Friday with some other new topic. But we will continue with this topic again in coming week so that we could do even live trading as far as commodities is concerned. Thank you very much.